Hello, hello, hello. Good
Hello, good
evening.
evening.
Welcome back to another session of Chat with Momvestors. I'm Nikki, and my
And I'm
sister is
Karine from the
Erin.
NCPI group.
That's right, and we are the Momvestors, the one and only.
Absolutely.
So, today is the fourth and final of the series that we had been discussing for the last four sessions. We've been discussing the different scenarios and experiences of, migration to a new country, in our case, Canada, how we learned about the housing system, networking, settling down as a new immigrant, either as an individual person or as a family, saving strategies, what we wish we knew back then, but that we now know and we've shared about for better strategies of savings. And tonight, what are we going to be talking about, sis?
We are going to talk about the credit score system in Canada.
That's right. The
Yes.
credit system in Canada. So, just to give a quick disclaimer, again, the informations that we share during our sessions are mainly based on our experience, on our education, and on our knowledge. We are not financial advisors, we're not mortgage brokers. We're just sharing these things for educational purposes only. Please do your own due diligence and speak to your financial advisors or mortgage brokers as applicable to get the information that is directly for you, that is applicable to your situation in real life.
From professional.
So,
Yes, absolutely.
yes.
Licensed professional, especially because today we're talking about credit, right? Yeah.
So the Canadian credit system. So how did you learn about this? It's like if somebody were to ask you, what is that? What is the Canadian credit system? What's that? What does that mean?
Well, for me, the way I learned about it is for those watching, they may recall from or watch the previous episodes. We were talking about how we were trying to find our first home when we came to Canada, right? And when you're trying to find your first home, what will happen is that landlords will assess your tenant profile. And one of the things that was requested from me by the landlords that were assessing our profile was our credit score. So as a new immigrant, I was like, okay, so what is that credit score? I went and I Googled it, I researched on it. It's actually a score, a number to rate your profile, your credit profile, how you deal with debt. What do you do with it? How do you manage it? And they have certain expectations. And based on your behavior, they will give you points. And the highest, the best.
That's right. Thank you, sis. And when my sister said they, in Canada, there are two main organizations that are the day that determines this credit rating, that determines your use of credit and gives you the score. And the score can range between 300, as low as 300 and as high as 900. And they have this system in place already. And the day are either Equifax Canada or TransUnion Canada. These two entities,
Yeah.
institutions or entities, they are the day. They're the ones that determine what your credit ratings are based on your use of credit.
And how do they do that, sis?
That was going to be my
Of course,
question.
when you come to Canada, you don't even know about
Right.
those day Equifax and TransUnion, but they will know about you. And the way they will know about you is because you will be dealing with any kind of bank, because you need a bank account. You will deal with them, and probably would get a credit card just to get into the system and make sure you're buying your necessities, your commodities, right? And as soon as you enter into the bank system, you open a bank account, you get a credit card, any sort of financial transaction, those bank, they have a duty to report to Equifax and TransUnion in a regular basis to say, hey, this is how Karen is doing with this account that she opened. This is how Nikki has done the last 2 months. And they will do that regularly. And that's how Equifax and TransUnion, they know about you.
Thank you, sis. And someone might think, what about me and my husband? Where, just like you say, the moment I start doing transactions and dealing with the banks, and maybe the bank now, because there are programs with RBC, for example, that will give you a newcomers credit card where you don't need a credit score yet because you don't even have one. You literally just got in the system. So, say my husband and I, we just moved to Canada and we both have really good jobs, make six-figure salary, for example. And for some reason, we both got, let's say, $500 credit card from RBC. And then 6 months down the line, my husband checks his credit score, it's 900. I check mine, it's 600. Why? And our salary is the same. Why do you think that might be, that we would have different, credit ratings, even though we quote unquote have the same income and we were both approved for the same $500 credit card? What are some factors that would have made my credit card a lot lower, my credit score much lower than my partner's?
Yeah, absolutely. And says that's a great question because, and it's a very common question, right? People would just accept it. But in fact, there are very concrete factors behind that. Okay. We, from our experience, there are 5 main factors. Okay. So you got that credit card, that 500 credit card. Your husband got the same 500 credit card. But let's say you didn't use it the same way. You got your 500 and every month you are using your 500, just paying back the minimum. And so on average, at the end of the month, let's say that your credit card is used 100%, even though you're paying it back because you have a good income. You're paying by installment. On average, you're using $450 out of your 500. So every time your bank reports to Equifax, sends that report based on your monthly credit card's bank statement every time, and they do it at the same time, the same day of the month. You can check it. They will tell you your credit card statement is on the X day of the month. They do it at the same day. Every time they do that for you, sis, you are always like, you've used 450 out of 500. On the other hand, your husband, he's same situation, but every time the bank reports, he's at 200 out of 500. What does that mean? He's been using the 500. His rate of utilization of the credit is lower than yours. This is good for his credit score. Is not good for your credit score.
Right.
Because the way they see it, Equifax and TransUnion, is that, so Nikki relies a lot on credit to live. Whilst her husband, he does not rely a lot. to live. So he's rated on that specific factor, which is called the rate of utilization. He's scoring more points than you.
Right.
That's one of the factors. I mentioned 5, right?
Yeah.
Yeah. So that's why sometimes you will have a $500 credit card, and it's better to ask your bank to increase your limit instead of having a 500 whenever you can. And sometimes they will even offer it proactively. Say yes, always say yes. So if they say, or if you ask for a limit of 2,000, say yes and continue to use just your 450 or your 200 out of the 500.
Right.
But the thing is, because now the limit is higher, guess what? The rate of utilization will be lower, because what they do is, how much have you used out of the limit? On a $500 card, if you're using 450 out of 500, that's almost 100%. But if you're using 450 out of 1,000 or 2,000, you're very far from the 1,000, right? From the 100%. So when your limit is higher, your score will be better, and you're still using the same amount.
The same amount. Yes.
So keep that in mind.
And that's great because, for a lot of people in our community, we're always scared of debt, right?
Yeah.
People were often like, oh, you know what? I only need a $500 credit card. I don't need more than $500 a month. I don't want this pre-approved 5,000 credit card. Don't give me 5,000. I just want the 500. But what you're saying is, if you're disciplined enough that you know that you will not be using more than that $500, still take the 5,000 that has been offered to you, because as we know, when you do need that credit, when you do need that high credit limit, the bank may not be doing any offers at that time. And when you go and say, I want to increase my limit, when you have not been pre-approved, guess what? That requires a check, a credit check. And every time you do what we call a hard check, when you're applying for credits, which is called a hard check, then it affects your credit score. Every time you apply for a loan, you apply for a mortgage, you apply for a car loan, whatever sort of credit, those are considered hard credit checks, and they, of course, they eat your credit scores. So my sister has talked about the utilization. We've spoken about, I guess now that I briefly talked about the hard versus soft credit check. So a soft credit check would be you going on your mobile app, your banking app, and checking your credit score. That does not affect your credit bureau whatsoever. So in a case that doesn't apply to my husband and I, in that scenario would be how long you've had credit to. The length of credit would also determine your credit score rating. The longer you have had your credit bureau active and you've had a good history of credit use, all of those things affect your credit score. And those credit score are definitely considered. Your credit score and your credit history are considered every time you want to apply for a loan, either a mortgage or a car loan or whatever type of loan, like school loan, anything. You spoke also about the payments when they use. If my husband used 200 versus me using 450, and how often I pay my 450 versus how often my husband pays his 200 versus the credit utilization rate as well. So those are all, metrics that are considered for the credit score.
Yeah, so far the credit utilization, the number of inquiry, how many times people are checking your credit, meaning how many you're asking for credit, how many times you're asking for credit, and also how you're paying your credit card, yeah, or your credit account, I should say, because it's just not about credit card.
Yeah, yeah, yeah. One thing we wanted to talk about briefly, which kind of ties into what my sisters talked about too, was the mistakes that people often make that affect those credit scores, that affect the credit ratings, and that you might not even know that you're making those mistakes. And say the time comes now that you need a car loan or you need a mortgage, and then you realize, oh, my credit rating is actually very low. I can't even get a loan, or I can't get a mortgage, you know? And one of those mistakes is the missed payments. So every month, like my sister said, the same date every month is when the credit report is sent from the bank to the institution, so Equifax or TransUnion. If you miss a payment that month, and the report is sent with your record showing that you've missed a payment, those are part of the things that affects the credit rating. Those are part of the things that affect your credit score when you have multiple missed payment, even if it's just for a few days. The fact that that payment was not done on the due date before the bank has to send their report to Equifax or TransUnion, this could affect your credit score. And sis, one of the things we have also experienced is that sometimes the bank miss their reporting period.
Oh, absolutely. But that you cannot control, right?
Yes.
So you always have to make sure that, give me a second.
How are you going to know we're moms if the kids don't pop in? Okay, while my sister is okay, she's back. Yay!
I'm back. I have a 2 years old, very, very curious about this, and she should be. So yeah, going back to what we were saying, absolutely, you do not control when the bank is gonna send the report to Equifax and TransUnion, right? So you have to be, like my sis said, disciplined and consistent every month, making sure that you check your credit utilization. You make your payment in time. That's payment history, right? You don't ask, you make sure that people don't check your credit without your consent.
Yes.
And that's a trick too. If you go shop around for a car or you just ask for quote of certain things, be explicit. Tell people, ask people, are you going to check my credit bureau? Ask them, because sometimes they will make you sign things, and that little star that nobody reads says, yes, I'm giving consent for you to check my credit bureau. Whilst you're just shopping around, like maybe window shopping, you don't plan to actually make the purchase. So be careful about that. Those will affect your credit bureau, the hard inquiry. And then the other thing that we mentioned is, what was it?
Maxing out your credit. So that utilization, those things people again don't know. Those are mistakes that people generally make. That not taking the I limit of credit, so that you're not maxing out your credit product. So either your credit card or whatever it is.
And actually, one thing about the credit products is it's important to have a mix of them. We keep saying credit card. Another thing that will affect your bureau is, remember, when someone is looking at your credit profile, they want to know how you behave with debt. They want to know that you can handle multiple accounts, a credit card, a line of credit, installment. So they want to know that you are comfortable managing debt in general. So the mix of credit account is also important. So
Yeah.
payment history, credit utilization, a mix of account,
Product.
number of inquiry, right? And
Yeah.
payment history. Did I say already payment history, sis?
Utilization.
Yeah.
Yeah. So this part about now that you have a great credit score, you've been on top of things, you're mindful of things, you're disciplined, you're educating yourself more on credit usage and credit products, and doing the right things at the right time when it comes to credit utilization or applications. How could that tie into real estate, for example? Because when you're applying for a mortgage, there are certain criteria that has to do mainly with your credit history, and your credit score, your credit history, your credit utilization. Those are like important parameters that the bank would look at while they're running the numbers to see the amount of a mortgage that you can qualify for. Of course, in addition to your revenue, in addition to your income. However, even if you have a high income and you have a terrible credit history, but it might mean that you have to put down a lot more down payment, which that's not always our goal, at least for my sister and I, in terms of investments. So be mindful of these things.
Yeah, absolutely. So if I may add, think about it as when you go and look for a loan for anything, whether it's to buy a car or a real estate investment to a bank, put yourself in their shoes. This is a stranger looking at borrowing your money. You don't know them. So they've put in place a system using that credit score as one of the criteria to kind of gauge your personality, your behavior. Are you a good borrower? Because what they want is for you to pay back.
Yes.
That's it. So think about it that way when you approach those lenders.
Some of the myth, I wanted us to debunk some myth quickly. People would say, oh, I don't want to check my credit score on my bank because it's going to affect my score. That's a lie. No, it won't, because that's considered a soft check and you're checking it on your bank. Versus what my sister was saying.
Actually, says you have to make sure, because those banks can make mistake when they report your credit bureau. You want to make sure that they are reporting accurate things. So once in a while, maybe every 6 months, check your credit bureau. Make sure that the information is accurate. Yes.
Yeah, and things are being reported correctly. How much you've spent and your payment timeline are actually being captured. Because like we were saying, sometimes the bank, they lag behind in their reporting, and then your credit history or your credit bureau or your credit report is showing that you haven't made some payment that you actually already did like 3 months ago, but it's not reflecting on your credit bureau. So yeah, a soft check, that's a lie. It doesn't affect your credit score. Another one is that in order to keep a high credit score, you need to keep balances on your credit product every month. That's also not true. It's best if you pay off your credit and you keep your utilization really low. But most importantly, make sure that your minimum payments are done every month so that you're not capturing missed payments in your credit.
They are done every month on time, sis. On time is important, because even a late payment could affect your credit score. Yeah.
There's the last one as well that says closing cards improve your score. It actually damages your score Because if you think about it, if you've been using a credit product for a while, it has your entire history of credit usage. And now, because you got a new credit card, you think, you know what, I'm going to go close the other credit card I have. Now you don't have that history anymore because you've closed it. It doesn't show your history of usage. So
that's probably one of the most common mistakes
of people closing their product. So one thing we want you guys to do tonight, if possible, or tomorrow, or whenever you're watching this, is to log into your banking app. And there is always a section about credit score. Maybe you've seen it before and you're like, oh, that's a red button, don't touch it. No, actually, touch it as many times as you want to. You can touch it every second, every day, go through it and you will see your score. But importantly, you want to see your report. Look for the button for credit report, not just the score. Yes, it's great to have the great score, but your report is what's most important because this is where you would see the details of your history of credit usage as well. I think that's it for tonight, sis.
There is a free, just one last thing. There's a free website, actually, borrowwell.com, that you can you can sign up in there and they will do the same.
Yes. If you can figure it out on your mobile banking app. Sign up an account on borrowwell.ca and you can view it even sends you a notification every week to let you know what your credit report is looking like and what your credit usage and history is looking like every week. So I hope that you guys you find some good value in tonight's topic and the entire 4-part series about, settling as a new immigrant, getting to know the system, the methods of saving, and lastly, the Canadian credit system. Because with the credit system, you're able to now leverage the credit product to even invest in whatever forms of investment you want to do. So if you have a good credit record and you're able to qualify for a low interest rate line of credit, for example, now you can use your line of credit to go invest in, ETFs, S&P 500, whatever, even real estate that would be making you more interest, more returns than what you need to pay back to the bank. So that's called leverage. Maybe that's a topic for another day. But follow us, subscribe to our YouTube channel, Chat with Momvestor. Follow us on Instagram for everything that we're doing on affordable housing, on multifamily development. And we will see you next time on Chat with Momvestor.
In 2 weeks. God bless you.
2 weeks.
Bye-bye.
Good night.